It's very clear that we are making very good progress in our integration plans, but I'm also glad to see that clients are staying loyal. They understand our stories, the rationale of the combination, and they are entrusting us with very good inflows in both the second quarter and the third quarter as we speak.
One of the numbers that struck out to me today was that 29 billion worth of negative goodwill. That sort of plays into the view that this was actually the deal of the century for UBS.
Well, actually, when people that look into those numbers, they will clearly understand that this negative goodwill is the equity necessary to sustain 240 billions of risk-weighted assets, and the financial resources to go through a deep restructuring that is necessary at Credit Suisse, because our analysis has proven that the business model was not viable any longer. Credit Suisse has excellent people, clients, product capabilities, but the business model was not sustainable any longer and needs to be restructured.
There was a lot of questions and concerns about what was going to happen to deposit flows, particularly because in the final months of Credit Suisse, we saw a massive wave of outflows from that business. What are you seeing now?
Now we see, as I said, very good momentum in inflows both on the UBS front and CS fronts, particularly after we closed the transaction in June. Credit Suisse had in June net new money in its wealth management platform. We see net inflows in Switzerland, in the Swiss bank operation, so clients are coming back, and Credit Suisse lost around 200 billion during its difficult times in 22 and 23, and we are seeing now some of this coming back, and our goal is to try to get back as much as possible. It's not easy, but it's our ambition.
Do you think you can? Are your customers being loyal to the brand?
I think it's very good to see how loyal the clients have been to Credit Suisse. It's something that we saw also at UBS when we went through our own issues, and it's one thing that is really rewarding for the people who are putting so much effort in staying close to clients, to see that clients are paying back that trust.
Well, let's talk about the actual integration and how it's going. You announced yesterday that you will be closing down or winding down the global markets division. What other decisions have you taken with respect to investment banking and wealth management?
No, what we do, we will now focus on integrating the part of the investment bank of Credit Suisse that fits into our strategy. In terms of risk-weighted assets, is around a third. It's 9 billion. It's only 13% of the overall risk-weighted assets that we use in the investment bank. And what we are shutting down is the entire infrastructure, the IT infrastructure, and everything that is there to sustain. So we are migrating people and positions on the UBS platform. And this is very important, because one way for us to achieve our financial targets is to take down costs by shutting down infrastructure, merging legal entities, and this is something that we're going to do between now and 2026.
Well, back in March, the headline figure that UBS had talked about was $8 billion in cost savings. Today, that's been revised upwards to 10 billion. Why is that the case? Well,
our aim is actually to go beyond 10 billion. So we are aiming to reduce our gross cost. So the baseline being end of 2022. From there onwards, our ambition is to decrease costs beyond 10 billion before making investments in our platform to make it more resilient, to make it stronger, to sustain existing business in the new combined organization, but also for our growth initiatives.
How much of that 10 billion comes from personnel reduction?
Well, in our industry, of course, personnel is a big issue, but our cost ambitions will be also delivered through, we are counting on natural attrition, we are counting on retirements, a lot of internal mobility, and of course, unfortunately, we are also going to have to take some proactive actions, but we do that in the most responsible way, and in order to mitigate the problem for people affected.
The headcount reduction efforts have already started. How far away through the process are we?
Well, actually, if you look in terms, we don't really like to talk about forward-looking on headcounts. We have targets on cost, and as I said, we will address that. But every quarter, you will see the progress on how headcount plays a role in achieving our targets. But last quarter, you will see from the reports today, we had already 8,000 headcounts reduction at Credit Suisse compared to the beginning of the year.
So there isn't a headline number that you're targeting?
No.
Talk to me about the decision to retain the Swiss bank. There obviously has been a lot of political chatter about your decision to maybe spin it off, maybe do a partial IPO, but in the end you've decided to retain it. Why?
Well, it was not only political chatter. Everybody had an opinion on what we had to do. So I think that we had to focus on what was feasible. We took it in the right way. We listened to feedbacks and we went through a deep analysis of what would be feasible and sustainable, both from a client expectations, employee future, from a social standpoint of view. And at the end of the day, we had to look at feasibility, the risk of implementation, sustainability, both from a prudential and regulatory standpoint of view. And at the end of this process, it was crystal clear that the best options for clients, employees, for Switzerland is to have a stronger bank that is able to serve its clients in a more comprehensive way.
So the Credit Suisse branding will remain domestically?
We expect the integration to go through in 2024, early part of 2025. Until then, nothing will change to the way we approach clients, to the way clients are served, and therefore the brand of Credit Suisse in Switzerland will continue to exist. Abroad, I don't think it's gonna. We will phase out in the vast majority of the cases the Credit Suisse brands and integrate it into UBS. But we cannot rule out that maybe in some circumstances the brand will be used also outside Switzerland.
Now, a couple of weeks ago, you took the decision to no longer lean on the state support, which was a sign of confidence. Are you therefore confident that you're not going to uncover more problems when looking under the hood of what's in Credit Suisse's balance sheets, that you have the balance sheets and the capital to absorb losses?
Well, I'm very confident because, yes, first of all, not only we had a top-down view of the risks before June 12, but after June 12, when the merger closed, we had an opportunity to go deeper into the books and analyze the situation. And therefore, I'm very confident and positive that we can manage those risks after taking the appropriate provisions and the analysis. And in that sense, also the fact that UBS has a strong capital base and resources to manage this situation makes us very comfortable that we can live with that. Having said that, the fact that we were able to return the guarantee doesn't mean that things were easy or will be easy. It should not be connected with the reflection of the state of CSs during the weekend.
There is talk that you may be looking to issue an AT1 bond. That's quite interesting, given the fact that the Credit Suisse AT1 bonds were written down as a function of this takeover. Would you go down that track, and do you think that people actually have faith in the product, given what happened?
Yeah, AT1 will continue to be an important element of our capital base and our things, but we are not in a rush to come to determination on if and how to access the market.
Just a final question for you. At the press conference in March, the chairman, Colin Kelleher, said, and I'm going to quote this, "We have to let everybody through a culture filter to make sure that we do not import something into our ecosystem that causes issues." Many Credit Suisse employees were offended by those comments because the implicit assumption was that there was a culture issue at Credit Suisse. What is your perception?
Well, I think that there are two elements. One thing is that, of course, I don't think it was the intention to offend everybody at Credit Suisse. I think that actually Credit Suisse has great people and great capabilities, but there are two elements of that culture that needed to be addressed. The most important one is risk discipline, risk-reward discipline. The way we manage business as a cultural element that needs to be taken taking in consideration, and I don't think people should get offended for that. On the other hand, of course, in some cases, which is not idiosyncratic to Credit Suisse, some people were not really probably behaving in the best interest of clients and the bank, and those kind of elements, of course, we always try in any organization to minimize how they can affect your organization. So I hope people now understand the spirit of what has been said, and I'm confident that we will be able to integrate and work very well together with our new colleagues.